project is to really investigate the quality with which individuals make health insurance decisions. And so I think it's a fairly self-motivating question, but nonetheless, over the last several years, we've seen this strong recent trend towards the expansion of choice, both with respect to healthcare reform, the ACA, and Medicare most notably, but also in employee-sponsored plans, where the menu of possible health insurance options has expanded dramatically to the point where individuals are being faced with menus of tens or dozens of choices. So I think the narrative that has really propelled this movement towards more choice, particularly in the public setting, exchanges offer Americans competition, choice, and clout. Insurance companies will compete for business on a transparent, level playing field, driving down costs. Exchanges will give individuals a choice of plans to fit their needs. So choice is good because people will kind of sort into plans that fit their needs, and it will drive competition that will lead to lower prices and higher quality plan offerings. So underlying this narrative or this rationale is the assumption that people actually are able to navigate the choices that they're presented with. So people are able to kind of sensibly discriminate across the available menu of plans. And so we have a lot of reasons to suspect that consumers may not be so good at these decisions. A lot of this work has been done by people in this room, but there's a strand of work that has, I think, very convincingly showed that there are inefficiencies in choice in the context of the very complicated context of Medicare and the Medicare exchanges. There's another interesting and I think strong line of work on inertia of plan choice, even amongst the non-elderly and working Americans. And certainly there's work showing that we have deficits in our ability to understand and our knowledge and awareness and understanding of the underlying incentives from which these plans are structured. So there's a lot of reasons to think that we should suspect choice quality. And what we're going to do in this project is we're going to try to diagnose the quality of plan choices in a setting that I think is really attractive for making clean inferences about this choice quality. So I think it's attractive for three reasons, potentially more. One is that it's very large, so we have a diverse kind of representative sample of employees. This is a firm with 50,000 employees. A second reason it's attractive is that this firm had a very traditional set of plan offerings in 2008, but then they became self-insured and they made a concerted effort to introduce this fairly innovative new kind of plan regime where they allow their employees to actually build their own plan by choosing sequentially across different cost-sharing features. So this build your own plan strategy, which I think was really had benevolent intentions, led to the creation of a plan menu, which essentially had 48 different choices. So this is going to be in 2010. And interestingly, the plan continued to evolve and the configuration of the plan menu continued to change. We're not going to leverage that evolution in this particular paper, but it offers another kind of opportunity to study how choice is affected by the nature of the plan menu. So today we're going to focus on the decisions of employees, particularly those choosing single coverage in 2010. And this is essentially the conjoint menu that's created from the choice across these different cost-sharing options. So employees are asked to choose a deductible, co-insurance, out-of-pocket maximum, and a copay on an otherwise completely standardized menu. So everything else is held fixed. So it's another attractive feature of this environment as opposed to the more complicated settings like we find in the Medicare Part D exchanges. So the third and I think most critical feature of this setting that really allows us to say something diagnostic about the quality of choice is the fact that a lot of the plans are what we call financially dominated. So here we can see price schedules for all of the plans by deductible, holding fixed the out-of-pocket maximum, the coinsurance, and the copayment. And so each of these panels, if this screen was even bigger, I'd show you 12 different panels, which would comprise all 48 of the plan choices. each of these panels represents 4 plans that are otherwise equal except for the deductible choice and the cost. And so you can see across these 2 panels that the $1,000 deductible plan, in some sense, financially dominates each of the other 3 deductible choices. So there's no set of beliefs about your future health expectations. There's no set of preferences regarding how much risk you're willing to tolerate that could rationalize a choice of anything but the $1,000 plan. And potentially you can come up with other explanations regarding a desire to, smooth out your flow of expenses, et cetera. And so we'll maybe touch on that a bit later. Again, this is the price menu. And here we can actually communicate how much dominance there is. So of the 36 low deductible plans, on a nominal basis, 35 of them are completely dominated. So had you been tempted to choose plan 23, you should have instead chosen plan 47, and you would have been better off regardless of your health utilization. Now, of course, there is this issue that premiums are treated differentially with respect to their tax treatment than out-of-pocket expenses. But even after controlling for this differential tax treatment, you're left with about 30 out of the 36 low deductible plans that are financially dominated in this sense. So in terms of characterizing how employees did when faced with this somewhat perilous plan menu, we can do it pretty easily. We can simply look at the distribution of their choice of deductible, and we see that 61% of individuals on a pre-tax basis chose plans that were financially dominated. In particular, there were about 27% of individuals who chose the $350 and the $750 deductible plans, which are not only dominated by the $1,000 plan, but they're also locally dominated by the $500 plan. On an after-tax basis, about 55% of the employees, so still a majority, were opting into these dominated plans. So another way to look at the plan choice is to look at the distribution of choice across the entire plan menu, 48 plans again. Here they're arranged by the amount of cost sharing, so the low deductible plans are on the left and the high deductible plans are in red. And a few things are notable. One is that there's some density of choice across all of these plans. So it wasn't as if the employer's interface pushed people or strong-arm people into a particular plan choice. The second interesting feature is you'll see the modal plan is plan 48. That was actually the default plan. So we won't go into it too much, but we think that about 5% of that 15% is due to default action, but at least 85% of the population, and we think about 95% of these employees, made an active choice. There is this question of how costly these choices were, and what we show here is we estimate the potential cost savings of switching to that equivalent plan that was in the $1,000 deductible. See that the median employee could have saved about $370. There's a lot of variation in terms of how much of those savings go to individuals by their original deductible choice. There's an interesting heterogeneity that appears in the choice data by income. So those of low income actually do disproportionately worse. I think Sendel could recommend a book to explain this pattern. So there's a steep gradient in terms of salary and in terms of the quality of choice. No time to go through the experiments except for to say that the second piece of the project was really an attempt to understand why people are making these costly, poor choices. And I think the obvious explanations are, well, there's so many choices out there. There's 48 choices, and maybe that could have caused this distortion in choice quality. The other issue is maybe there's some feature of the enrollment interface that caused people to not be able to, or obscure the necessary trade-offs that are required to compare plans in a sensible way. So what we tried to do in an experimental context was create an analog to the firm environment, and then simplify that incrementally. And I think the takeaway from a lot of the experiments is that even faced with the simplest plan menu, 4 plans, 1 attribute, very little variation, very little other variation, what you find is that people are still, the majority of our participants online are still making these basic errors in terms of their plan choices. So they're still choosing these dominated plans. The other, I think, takeaway from the experimental work is that to the extent that we were able to identify interventions to improve choice, so namely simplification and aggressively introducing education to help individuals make these choices, there's this, the education had a strong effect, but it also had this leveling effect such that while the baseline choice of those with low income and low literacy was very low, the interventions actually leveled the choice quality across these groups, which might be important for policy.